Today on the Blockchain Report, Bitcoin's back down to 111K and the headlines are already writing tomorrow's price action. Michael Saylor says Bitcoin won't just rival gold, it'll be 10 times bigger. Gold bugs everywhere are now screaming into their bullion like it's a therapy pillow. Meanwhile, the White House is prepping mass firings if Congress can't pass a budget because when in doubt, fire the help and call it leadership. And in California, Ian Calderon jumps into the governor's race waving the Bitcoin flag, promising to make the state the undisputed leader in crypto. All that and more right now in today's show. Let's go! Good morning, my fellow D-Gens and Diamond Hands, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, broadcasting live from San Francisco. It's Thursday, that magical day of the week where your work inbox is full and your crypto portfolio is playing dead like a possum on the freeway. Now, before we dive into today's circus of market makers and billionaires who treat X like their personal therapy session, do me and yourself a quick favor and follow RoxomTV and Hank at RoxomTV on all platforms, because if your financial plan still involves buying altcoins off Telegram, the rug pull you deserve is already warming up backstage. But right now, it's time to kick things off with today's market rundown, so let's check who's moonwalking, who's face planting, and who's about to get a surprise Zoom call from the SEC. Let's go. All right, our Thursday tidings aren't the best right now. We can see Bitcoin's down about 2% this morning, hovering around that $111,000 mark. We were up back to around 117 last week. We've seen a bit of a drawback, but hopefully that next catalyst for the next big run is right underway, and we'll be getting to that in just a bit. Can we check out what's going on in the rest of the cryptoverse here, gang? Here we go. We're going to bring it up. There we go. So Ethereum, not having the best morning itself. It's down nearly 4.5%, actually retraced below that $4,000 mark briefly, but it looks like it's pumped back up above. Let's hope that stays for a little bit. And also, we got Solana down here, kind of been taking a bat to the face in the last week and a half. It was all the way up to around 250, but we've seen it retract nearly 20%, currently sitting just above 200 bucks. In TradFi today, we got the Dow Jones sitting at above 46,000, not a lot of action there. We got the S&P 5 also just kind of chilling around that $6,600, $6,700 level mark. Next, we got the NASDAQ composite right around that 22,300, 400 arena. And last but not least, we got MicroStrategy not having the best day. I think Michael Saylor might be calling in sick today. They're down nearly 5% this morning, all the way down to the low 300s. So not the best day for MicroStrategy right now, but they'll be fine. All right, we got a lot to go, so let's head over to do the desk because it's time for this morning's bull run. Let's do it. All right, welcome back. We got a lot to talk about today, so let's get on into it. First, are we welcoming Joe? All right, let's bring Joe to the show. We got our good friend Joe Eppel from Zoppo Bank joining us to talk shop this morning. Joe, how are you? Always a pleasure to have you back here on the Blockchain Report.
Hank, thank you so much for having me again. I'm always, pleasantly surprised when I get reinvited, and it's a highlight of my week. I'm doing very well, thank you.
Yeah, I don't know who keeps doing it. Someone just keeps sending you an invite, and I've become accustomed to seeing your face, so I ain't complaining. We're excited to have you back, Joe. We got a lot to talk about this morning. So we're going to get going with the top story, and we'll bring you back to chat about in just a sec. Sound good?
Sounds fantastic.
Rock and roll, here we go. So first up today, Michael Saylor. We know he's not having the best day. MicroStrategy stock is not doing great today. However, he has still chosen to make his way back in front of the cameras, and this time he's saying Bitcoin won't just rival gold, it'll grow to 10 times the size of it. Because when Saylor makes a call, he doesn't do modest. He goes straight for the jugular of every gold bug still polishing their bars in a basement somewhere. In his CNBC interview, Saylor called Bitcoin the next frontier for both national reserves and corporate balance sheets. He argued that corporations are done with the old tricks, cash piles, stock buybacks, whatever Wall Street used to call strategy. Instead, Bitcoin strengthens financial positions in a way that nothing else can. He even threw shade at the U.S. Strategic Bitcoin Reserve Bill, saying Bitcoin should be considered money while everything else, yes, Everything is just credit. And in case anyone missed, he took Goldbug's favorite phrase and remixed it, because Saylor knows exactly how to make them scream into their gold-plated pillows at night. He also pointed out the obvious. You can't teleport gold. You can lug it, insure it, ship it off, you can tariff it, and lose it at sea, but you can't teleport it. Meanwhile, Bitcoin, of course, does exactly that. Instantly, anywhere in the world, without a customs officer or a vault. And the numbers, well, they back them up. Strategy itself is sitting on nearly 640,000 Bitcoin after dropping another nearly $100 million on 850 more coins. In fact, over 190 publicly traded companies now hold Bitcoin, with combined institutional ownership over 1.5 million coins. And let's not forget the ETFs, right? BlackRock and friends are still hoovering up supply like Bitcoin Roombas. Even Deutsche Bank has stopped pretending gold is enough. They're predicting central banks will hold Bitcoin by 2030 right next to their dusty bullion, because scarcity, liquidity, and trust all point to the same conclusion. Gold had a good run, but Bitcoin is the upgrade. So when Saylor says Bitcoin will be 10 times bigger than gold, it doesn't sound crazy. It sounds like every gold bug in the world is about to experience the world's largest collective migraine. We're bringing Joe in. Joe, when you hear Michael Saylor say Bitcoin will be 10 times the size of gold, does that sound like maximalist hype or a realistic trajectory from your perspective inside the banking world?
I mean, it's a tough one. I think my heart definitely wants to say that indeed he is correct. But of course, this is Saylor, and Saylor has a very vested interest in saying that. One way or another, though, I think at the moment, what we are definitely seeing is Bitcoin's rise in prominence as a hedge, as a store of value. And Bitcoin certainly has a capped supply, which gold, though it is a finite resource, we do keep discovering more of it. Potentially implying that its supply is not so immediately limited, and therefore perhaps there is room for its value to decrease over time. Whereas Bitcoin, we know we've only got those 21 million, and once they are all mined, that's all she wrote. So for sure, I think the equation could potentially be built to make that true. But I also think we tend to focus a little bit too much on these high-minded big statements. They're good for grabbing attention, but I'm not sure if they are ultimately the best thing to be planting in everyone's mind. That Bitcoin is, this for sure get rich quick scheme that will make everyone generationally wealthy. Right. Well, I do believe that personally. I don't know if it is necessarily the best specific approach all the time.
No, I totally get you. Like, we love a big headline. I mean, we live in this attention economy, so everybody flocks to those. But it does, to your point, kind of set these unrealistic expectations that can kind of take the idea of what Bitcoin is and turn it into something else, like a Ponzi scheme or whatever. And we just know that's not the case. I actually just saw yesterday, there's a great Netflix documentary about Lou Pearlman, who is the manager of the Backstreet Boys and NSYNC. And that is a Ponzi scheme. That dude did like $1 billion Ponzi scheme. So this is not, but yeah, they're fun, but I don't always like the framing they leave Bitcoin in at the end of the day. But what are you going to do? Now, exactly. Joe, gold has always been kind of the boomer hedge, right? And if Bitcoin were to actually overtake it, what do you think that means for how central banks and private banks like Xapo are going to be positioning their reserves in the future?
I mean, I think it sets places like Xapo Bank up for a very strong future, and it's a future that we definitely believe in and are very much prepared for. Certainly, if Bitcoin does overtake gold, we would, I assume, see even more kind of strategic stockpiling of Bitcoin, not just by corporates and entities, but also by nation states. Although we do see a little bit of that happening right now. I mean, one would assume that a new global reserve is coming into be, and as a result, more would pile into it, and then it becomes a self-perpetuating cycle of ever-increasing value. So for sure, I reckon as we even start to approach that, and we are getting close, but when we get even closer, I don't think anything could be more bullish for the future of Bitcoin as a store of value and also just as an asset.
Yeah, I mean, Bitcoin is the superior new technology on the block, and I know gold's had a good run, and people are comfortable with gold. They've had it for a long time. You can touch it, you can hold it, you can feel it. But, superior technologies. The horse and buggy got replaced by the car, and there were people at the time that were like, nah, I'm good with the horses. But eventually, superior tech wins out, and we're seeing that happen right here. And assuming that does play out, as you and I both think it does, and Bitcoin starts eating gold's market cap, what role do you see for banks like Xapo in that world? Do you see them becoming more custodians, lenders, maybe something else entirely as we enter this new frontier?
For sure. So I mean, as Bitcoin becomes more and more of a global reserve currency, I think that what Xapo Bank has been doing for the last, about 2013 to 2025, 12 years, quick math, has been positioning ourselves to be the leaders of this new banking era. I think what we end up seeing then is Bitcoin becoming more of a traditional financial asset class that's used either as an underlying technology for settling transactions, which we are already seeing all across the world, or simply as a hedge and as a reserve asset. And places like Xapo Bank, which have been doing this for over a decade, we are well set up. We know exactly how to keep Bitcoin as safe as it can possibly be. We also have built financial tools around it. You can deposit your Bitcoin into your Xapo Bank account in our military grade storage, and you can take a loan out against it in order to get access to capital and spend it on your day-to-day items or on large purchase items like a car or potentially soon a house, depending on where you live in the world. And I think what that means and what this future state that we're talking about looks like is every single bank potentially offering that kind of custodian and also leverage possibilities with their customers' existing Bitcoin deposits and holdings. I do think a lot of banks and a lot of places have a lot of catch up to play in terms of becoming regulatorily compliant in the manner that Xapo is, as well as building the tools and technologies that they need to actually properly safeguard their users' funds, which isn't something that you can learn overnight. So I do hope people look to Xapo Bank as an example of how this is done right, and the future may be coming for everyone, but in many ways, Xapo has been building that future. It's already here. Sign up and you can be part of it.
Yeah, I mean, absolutely. There's no one in a better spot right now to provide for the new Bitcoin era that we're entering into other than Xapo. And you can already see it from a lot of the big banks out there. They're already starting to try and play catch up. I mean, over at Morgan Stanley, they just decided that there's enough demand for Bitcoin that they are going to begrudgingly start offering crypto to their clients, even at the chagrin of Jamie Dimon. So it's happening, and Xapo Bank is in an absolutely great spot to provide those new services for these new customers as we enter this next financial era. So that's exciting stuff. We got another story to talk about here, so hang out. Joe will be back with you in a sec, because right now it's time for Blockchain Without Borders. Let's run the stinger, guys. All right, so now we're taking a trip around the world, and let's see what's going on in Brazil, Thailand, but let's start first here with the UK. You see, in London, a newly listed company called bHodl has announced its very first Bitcoin buy. The grand total, 100 BTC. The cost, a little over 11 million bucks. Average price about 113K per. That single purchase alone puts bHodl in the top 100 public Bitcoin treasuries worldwide, ranked at number 98. And in fact, if we bring up our little leaderboard here at bitcointreasuries.net, we should be able to see their new entry on that leaderboard at 98. Are we able to get that up, guys? Well, they're working on it. Okay. Well, until they do, buying 100 Bitcoin and you're suddenly a global player, not the worst. And we'll see it here on the screen here in a sec. But to catch up, they'll have to do a little more stacking because there's a lot of people ahead of them. SmarterWeb, the UK's largest public Bitcoin treasury company, holds over 2,500 BTC, worth around 284 million bucks. They're ranked 29th globally. And of course, Michael Saylor's strategy, still the king. Strategy just added another 850 more Bitcoin last week and now sits with nearly 640 100,000 BTC in their vaults. So BHODL is starting with the kiddie pool, but they say they've got a long-term plan coming. According to their statement, they'll be making disciplined acquisitions to build a strategic Bitcoin reserve while also powering Lightning Network operations. Or in other words, stack sats, run nodes, collect routing fees. The company listed Monday on the Aquis stock exchange under the ticker HODL, raising about $21 million. Now, Aquis is the UK's bargain bin exchange, all right? Cheaper and smaller than the London Stock Exchange, but perfect if you're, a growth firm looking for liquidity without the hassle. CEO Freddie New is a former solicitor and co-founder of Bitcoin Policy UK. Backing them, Coin Corner, which holds about 14% of the shares. Coin Corner CEO Danny Scott now serves as chief Bitcoin officer and a director. And of course, we got Adam Back, one of Bitcoin's OGs. He holds over 25% of the shares. Back is also preparing to head up the Bitcoin Standard Treasury Company in the US after it merges with a Cantor Fitzgerald SPAC and lists on the NASDAQ. So, BHODL may be small today, but with Adam Back at the table, they've got some serious heavyweight connections. And investors, they're already piling in. The stock is up nearly 35% since listing, now trading around $29 a share, which is not too bad for a firm that currently owns fewer coins than some random whale's cold wallet. But hey, everyone's got to start somewhere, right? And when your ticker is literally HODL, at least no one can accuse you of hiding the strategy. All right, Joe. 100 Bitcoin is pocket change for whales, but enough to make a company a top 100 treasury. What does that say about how early we are still in corporate adoption? What do you think?
Oh, we are still so early. I mean, just looking at this chart here, you can see, Saylor is far ahead of the curve and is certainly going to be the key player for a long time to come until we start seeing nation state balance sheets get on board. But there's a lot more room there and a lot more opportunity for corporates to start stacking those sats. What that also means to me as a consumer, not as a corporation, although maybe one day, is that when that demand does pick up, we are going to see a massive liquidity crunch as those enterprises that have a couple thousand or a couple hundred Bitcoin on their balance sheets start to want to 10x that, which they very well may, depending on what happens in the next couple of months in the world as a whole. So for me, we're still very early, and there's definitely a big liquidity crunch coming up when everybody who isn't yet in the race decides it's time to get in it.
Yeah, I think right now it's around, I've read about 1.5 million Bitcoin are held by corporate treasuries on the whole, and that's out of 21 million, and we still only have like 190 companies that are in this game yet. So I think that liquidity crunch will be coming sooner than later, very much to your point. But I do have a question for you. Do you think moves like this from smaller UK firms helps legitimize Bitcoin in Europe's financial sector, or is this small enough where it's barely registering compared to giants like Strategy and BlackRock?
I think it's very interesting because the UK is in a very different regulatory place than the United States and various other parts of the world where Bitcoin adoption is becoming less of a no-go for your more traditionally regulated financial institutions. The UK is also the financial capital of Europe in many ways, always kind of has been and still holds that title. And so as we start to see more companies within the operating conditions allowed by the FCA to stockpile or add Bitcoin to their balance sheets, I think it's a very positive signal that not only are more regulators starting to allow and starting to see this as something that is a legitimate financial action, but that isn't just localized to the United States. I mean, if I visually think back to the chart that you had up, I want to say like 98% of those companies are based in the United States or China. And it's fantastic to see another global Western power start to inch up that list and start to acquire some sats on that balance sheet. Ultimately, very positive sign, and I hope we see more of it.
Yeah, I mean, despite the small size, it is kind of nice to see more companies creeping up with the Bitcoin treasury play that are outside of the good old US of A. And despite the fact that it is only 100 Bitcoin, BHodl does have some nice backers. I mean, Adam Back himself and Coin Corner are standing behind them on this. So do you feel like BHodl's credibility with those types of people at their backing outweighs their small stack right now? It makes it seem a little bit more substantial maybe than just some company buying 100 Bitcoin. What do you think?
Yeah, absolutely. I mean, you can't take these things out of context, and the fact that they have that context behind them implies that this is probably just an initial foray, and perhaps we'll start to see them acquire a bit more. But ultimately, I think it's just a positive sign that we're starting to see this balance sheet acquisition occur in various other but across borders in various other parts of the world. And let's keep an eye on it and see what happens and who else joins this list. 100 Bitcoin's a good starting point, and hopefully we start to see more.
Yeah, absolutely. And if you were at Xapo, if you were advising a new public company that was interested in dipping their toe into the Bitcoin pool, what would you tell them to start off with? Would you recommend they start small and build, slowly like BHodl's doing, or go big out the gate like Saylor did? Because you kind of have to weigh the risk, but then the opportunity. Because if you buy a lot now, you're probably going to get it at a cheaper price, but then you're incurring a lot more risk in the near term. But you also, if you don't buy too much now, then you're probably missing out a lot of gains in the long term. Like, what would your strategy be if for a new company coming to you and asking how they should accumulate Bitcoin?
Well, I mean, it's a great question. Firstly, hashtag not financial advice. But I think the advice I would give corporates is very much the advice I would give anyone who comes to me with that question, which is, what is your kind of financial stability at this point? Are you in a position in terms of your balance sheet to be making investments? And how diversified are your current investments? How much risk aversion do you have baked into your current investment strategy? And for sure, for corporates, it's a different ballgame. It very much depends on the local regulatory authority of where their company is incorporated and where they are, financially licensed. And so all of those factors become a very complex picture. And I think what we tend to see is a lot of corporates want a bespoke kind of setup in terms of how they go about custodying their funds and what they want to do with those funds, whether they want to just keep them in a safe place or whether they are looking to actively and aggressively increase their stockpile. So the advice I would give is, it depends on your risk appetite, and certainly it depends on the risk appetite also of your board and your shareholders, depending on your company structure. And what we don't want to see is companies making reckless investments into something like Bitcoin that they aren't able to necessarily follow through on, which I think would result in bad press and generally a bad scenario for corporate Bitcoin treasuries in general. So I would always say, act within your existing risk framework, buy some, see how it goes. And generally the best strategy is to, dollar cost average and put it into a place where you're not going to need to access it. And if you do need to access it, come to a place like Xapo Bank where we can, A, for a start, keep it safe for you, and B, offer you the ability to access capital without necessarily having to sell that asset in the first place.
Yeah, no, all that makes a lot of sense. I mean, the Saylor playbook is great, but it's really not a one size fits everybody type thing, right? I mean, every business has its own, like you said, their own risk appetite, their own financial situation. So just buy and hodl doesn't necessarily work for everybody. So yeah, I think your bespoke approach makes a lot of sense. It's almost like you've done this before. I don't know how you're so good. Now, one thing I thought was funny about this story was that their ticker symbol is literally hodl. So Joe, from a banking perspective, does branding around Bitcoin memes help adoption? Is it clever marketing? Or maybe is there a thought where it's almost kind of the jokingness of it maybe takes away from the seriousness of the financial play? Like, do you think maybe it almost detracts from it because you're naming the symbol kind of after a meme? What are your thoughts?
I think we're in the meme. I mean, we've long been in the meme era. We only have to look at Dogecoin to understand that, and then the meme coin, frenzy that we've seen in the past and we will probably continue to see. I think having the ticker HODL, if anything, appeals to the existing Bitcoin maxi crowd and the community that we have. And I don't think it detracts. I think we're definitely in the era where little signals like this tickle people's interest and fancy, and definitely make you feel a little bit more inclined to take them, add them to your watch list or pump some cash into them, because it is a world where attention capture is everything. And if I'm not going to forget that ticket, right? HODL is going to be stuck in my mind now, and that means you're top of mind, and that means I'm going to want to, think of you next time I'm investing in a stock. So I think it's a smart move, given the internet age and the meme age that we live in.
Yeah, I think you're right now that I kind of had a little time to chew on it. I mean, once the Department of Government Efficiency officially started being referred to as Doge, I think everything was fair game in terms of naming symbols and acronyms like that. So I think you're right. All right, Joe, hang tight because we're going to take a trip to Brazil here real quick, because Orange BTC has gone full Saylor mode. The company just bought over 3,600 Bitcoin for nearly 385 million bucks. The goal: build up a strategic reserve before going public. Brazil already leads Latin America in crypto adoption, both corporate and retail. So Orange's buy is basically a flag plant, declaring we're going public and our balance sheet is Bitcoin. The model comes straight from Michael Saylor's strategy playbook. Start hoarding Bitcoin in bulk, then use it as your corporate reserve. And it's not just Brazil, okay? Corporate Bitcoin adoption is now global. As we spoke about earlier, there's over 190 public companies holding Bitcoin currently. And together, those institutions control over 1.5 million of those coins. That's worth hundreds of billions of dollars at today's prices. Now, why? Because unlike fiat or bonds, Bitcoin supply, as we know, doesn't inflate away. And while Ethereum slipped, the ETH-BTC ratio fell below 0.039. This is showing investors are rotating into Bitcoin as the hedge. Now, Orange's move also follows the wave of treasury stacking that has inspired companies across the world. Japan's MetaPlanet, Europe's SmarterWeb, and now Latin America's Orange. So with 3,600 Bitcoin, Orange immediately vaults into the ranks of serious treasury players. It's a $385 million bet that Bitcoin is the only reserve asset worth holding. And in Brazil, a country already leading the continent in crypto adoption, that bet looks less like a gamble and more like a sign of the times. So yeah, from Washington statues to London rookies to Brazilian whales, Bitcoin keeps proving one thing. It's the hardest money, the loudest protest, and the only asset everybody wants on their balance sheet. We're bringing Joe back. Joe, Brazil's Orange BTC just stacked over 3,600 Bitcoin. Does this mark Latin America's arrival on the global Bitcoin treasury map? What do you think?
I mean, if this doesn't mark the arrival on the global, Bitcoin treasury map, I'm not sure what else would. It's a big chunk of money, and as you already said, Brazil is leading the LATAM community in terms of adoption on a retail and business side. So perhaps it's just the next evolution of that. It's already where we see so much activity and where we see a huge amount of public interest. And this is definitely the next step. So I think it's the sign of more things to come.
Yeah, and part of me wonders, we've seen Japan's MetaPlanet. Then we saw Europe's SmarterWeb, now Brazil's Orange. Are we maybe entering this phase where every region wants to be its local Saylor or run that playbook? Because, with Strategy, we've seen their stock price go up like 10x since they started doing it. MetaPlanet's been on a great run since they started doing it. So do you think maybe part of the idea for them was, or Orange is, hey, we're going to be the first big player in Latin America, and maybe they'll see some sizable gains the way we had seen from Strategy and MetaPlanet? Do you think that maybe influences their way of thinking about this at all?
For sure. I mean, I think that definitely checks out. I don't think everyone who's jumping on the Bitcoin treasury bandwagon is doing it for fun, right? I think they've seen that there are real benefits to it from a stock price perspective, but also we're all living in the same global economy, which we've all noticed is a little bit unstable these days, with trade wars and with tariffs and all of these things not looking to subside anytime soon. And Brazil in particular getting particularly hard hit by tariffs with the United States, and that directly impacting their economy. I wouldn't be surprised if we see more people following suit, especially because besides the hedge and the ability to kind of internationalize your reserve, it's clearly got a positive impact on the stock, and that means that the people like it too. So why not? Why not add more?
Yeah. And an interesting thing about this particular case, Joe, was, they're doing this before going public. So my question to you is, what risk do these companies face tying themselves so closely to Bitcoin before they actually go public? And do you think investors reward, or are they going to punish that type of strategy?
I think it's very contextually specific, right? So I think perhaps in more developed countries where people are much less used to seeing something considered as a risky asset on the balance sheet of a publicly traded company, maybe it would be less well received. But I think in other parts of the world where perhaps we're a bit more used to local economic instability and being at the mercy of US dollar trade policy and US dollar currency fluctuations, maybe it's seen as more as a positive. And I think especially in a market like Brazil, where we have massive Bitcoin adoption and interest, and at Xapo Bank we see a huge number of people signing up from Brazil. I think it's a country that is pretty much on the orange pull trajectory, and I don't see a reason why Brazilian investors, at least, wouldn't want to capitalize on that. And other international investors who are looking to invest in companies that have Bitcoin on the balance sheet would probably also see it as a positive way in. So I think it's a strategy, and I think it is one that we've seen pay off in other parts of the world, and I don't see any reason why it would be different in Brazil.
Yeah, I think you're right on that one. And if the Bitcoin treasuries keep spreading worldwide the way we're kind of seeing right now, do you see a future where banks like Xapo need to service or partner with these corporate stacks directly?
I think very much so. The question that I always comes to mind is, if I am a corporate entity in whatever part of the world and I want to get Bitcoin on my balance sheet, how am I going to do that, right? Where is that Bitcoin going to be custodied? Who can I trust to keep my Bitcoin in such a way that I am not violating any of the financial regulations or obligations that I have as a publicly traded or even privately owned company, depending on where I'm incorporated? And so a place like Xapo Bank, which has been built specifically for all of these things, is in many ways the obvious choice, where we can offer corporates or individuals the means to safely custody their crypto or their Bitcoin specifically in a fully regulated bank and VASP. And not only just custody it, but also have access to additional financial services on top of that. So for sure, as an entity, Xapo Bank is incredibly well positioned for this, and I do hope that we are top of the list when people are looking at places to custody their balance sheet.
Well, I got to say, Joe, you make some pretty compelling points for you and the team over at Xapo. So for people in our audience that are like, you know what, maybe I do need a professional custodying and giving me advice on how to best manage my Bitcoin, what's the best place I can send them?
I would say Xapo Bank. Yeah, I think that's definitely the best place. You can find us at Xapo Bank app on X or xapobank.com. Feel free, reach out. Let's get you onboarded.
And Joe, you always have really interesting takes, and I love listening to your view of the world, and I'm sure our audience does too. You got a good Twitter account they can check out too, right?
That's true. It's still early in the game, but you can find me at Zimbo Joe. Yeah, it's Zimbo Joe. A reference to my Zimbabwean place of birth and the interesting economic experiences I had there.
I love it. And we love having you on the show, Joe. As always, thanks so much for joining us. And we can't wait to have you back real soon, bud. It's always a pleasure.
Thanks so much, Hank, and the team at Roxom. Always a highlight of my week, as I said. Have a great one. Here's to October.
Oh, you're too kind. We'll see. We'll see you soon, Joe. Thanks as always. All right, now we're taking a trip over to Thailand because their central bank woke up and decided to hit the freeze button on life itself. They locked down 3 million bank accounts in one swoop, all in the name of fighting financial fraud. Yeah, it was aimed at scammers running mule accounts, as they call them. But in the process, they froze the accounts of regular people, small businesses and expats just trying to pay rent and grab a pad thai. Victims have lost more than 6 billion baht to scams in just the past year alone. So the government said enough is enough, and they slapped on daily transfer limits and started combing through people's accounts. That means grandma can now only move 50,000 baht a day, which is apparently enough for groceries, but not for the massive hospital bills she might actually need to pay. And for the rest of Thailand, the cap is 200,000 baht per day. Officials promise that this is temporary, which in government speak is code for, we'll get back to you on that sometime between now and the heat death of the universe. Critics are already pointing out the obvious. Freezing millions of accounts might stop scammers, but it also erodes trust in the entire banking system as a whole. And when people stop trusting banks, you know what happens next? Hello, Bitcoin. Investor Daniel Batten called it free Bitcoin marketing. Jimmy Costro at the Thailand Bitcoin Learning Center said this story should go global. Or in other words, Thai regulators are moonlighting as Bitcoin's PR team. Meanwhile, small businesses and tourist hubs got absolutely hammered. Expats couldn't move money. Everyone ran to cash withdrawals and alternative payment systems. Authorities claim that by 2026, banks will have biometric verification and AI-driven fraud detection in place to make this less of a disaster. But until then, expect more frozen accounts and more people realizing that Bitcoin doesn't care about bank holidays, daily limits, or government overreach. And the cherry on top of all this, Thailand is simultaneously rolling out a crypto-friendly tourist program called Tourist DigiPay. Foreigners can spend crypto, convert it to baht, and use QR code payments, all while regulators monitor it inside a sandbox. So yeah, the same government freezing millions of accounts is also telling tourists, come spend your crypto here. It's almost like they're daring people to ditch the banks. All right, we're taking a quick break, but when we're back, more blockchain report coming up, and we have our second special guest of the day who will be joining us in just a bit, so stay tuned for that. Blockchain report coming back to you after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So guys, are you interested in effortlessly growing your Bitcoin portfolio? I sure am. The Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. Use it like any credit card. You can buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, welcome back. It's time for some AIO. So let's see what our robot overlords are up to today. Because currently it looks like OpenAI is now building 5 new US data centers for its Stargate project. That takes the bill to around $400 billion, because when you've already lost billions, why not keep doubling down until your AI can write you a refund policy? The project expands from 1 lonely site in Abilene, Texas, to 6 across the entire country. Backers include SoftBank and Oracle, because apparently Larry Ellison wants to power the AI apocalypse too. Sam Altman says this will be the cornerstone of America's AI dominance over China. Also, the cornerstone of America's debt ceiling problems, but let's focus on the positives, okay? At a press conference, Altman insisted they can finance $400 billion even though current revenues are only $13 billion. So, yeah, the math is sell equity, raise debt, and pray ChatGPT's Plus subscriptions go platinum. Completion is expected in 3 years with 7 gigawatts of capacity. That's 10 nuclear reactors worth of power to make sure your chatbot remembers your name. 3 of the new sites are with Oracle in New Mexico, Texas, and the Midwest. 2 more are with SoftBank in Ohio and Texas. Texas Senator Ted Cruz called Texas ground zero for AI, bragging about cheap energy and light regulation. He also told Altman, bring your whole company here, but leave the damn communists at home. Okay, so Texas is officially offering tax breaks, brisket, and Cold War nostalgia as its AI pitch. Stargate was originally announced at the White House with Trump as a $500 billion mega venture with OpenAI, SoftBank, and Oracle, and Abu Dhabi's MGX. Since then, OpenAI's executives have started slapping the Stargate label on any data center project they touch, including in the UAE and the UK. The Abilene site was being developed before Stargate even existed by Caruso and Oracle. Elon Musk once considered using it for his own AI project, because of course he did, you crazy guy. Each gigawatt of capacity costs about $50 billion, with 2/3 of that going to chips and networking gear, which means NVIDIA basically owns Altman's soul now. OpenAI even cut a $100 billion deal with NVIDIA this week. NVIDIA will drip $10 billion at a time into OpenAI in exchange for equity, and naturally, OpenAI will spend it buying NVIDIA chips. It's the financial version of selling someone rope and then buying back the noose. Altman says the chips are a humongous percentage of the cost, and it's hard to pay that up front. So the plan is innovate on the technology and also innovate on the debt instruments that keep you from collapsing before Q4. So, long story short, Stargate is either the launch pad for unprecedented economic growth or the world's most expensive server farm to generate bad Drake lyrics. I guess we'll wait and see. In other AI news, Google's DeepMind claims its Gemini 2.5 model just made a historic AI breakthrough. The brag? It solved a real-world problem that stumped 139 of the best human programmers on Earth. The flex, it won a gold medal at an international programming contest in Azerbaijan. The problem? How to send liquid through a network of ducts to multiple reservoirs as quickly as possible. The humans? Russia, China, Japan, some of the world's best coders. The AI? Knocked it out in under 30 minutes. The humans? They just couldn't even get it right at all. Gemini did bomb 2 of the last 12 tasks, but overall it ranked second place out of all 139 contestants. Google calls it a profound leap in abstract problem solving and a historic moment toward AGI, which is tech speak for please clap, investors. Come on. Now, Kwok Lei, DeepMind's VP, said it's even bigger than Deep Blue beating Kasparov for AlphaGo, crushing a Go champion. Because unlike chess or Go, this was a messy real-world problem. Apparently that means Gemini could one day design your drugs, your chips, or your next TikTok filter. The model was specifically trained to solve hard coding, math, and reasoning problems. So Google says it performed as well as a top 20 coder in the world. So congratulations, if you're the 21st best programmer alive, you're already obsolete. See, solving these problems requires deep reasoning, creativity, and a genuine spark of ingenuity, Google said, which is one way to say our bot can do better than your 18-year-olds in hoodies. Not everyone is buying the hype, though. UC Berkeley's Stuart Russell said the epochal significance claim is a little overblown. He pointed out that Deep Blue was also hyped and had essentially no impact on applied AI. But he did admit this may show progress in making AI code accurate enough for real-world use. Oxford's Michael Woolridge agreed it sounded impressive, but asked the real question, how much compute did this take? Google declined to answer that one, except to say it was more than what a $250 a month Google AI Ultra subscriber gets. Or in other words, unless you own a data center, don't expect Gemini to debug your side hustle app anytime soon. Still, ICPC Executive Director Bill Pauscher called Gemini's medal a key moment in defining the next generation of AI tools and standards. So, congratulations to Gemini 2.5, first AI to medal in programming. Next up, stealing gold at the Olympics, one duct piping problem at a time. And a new KPMG survey asked over 1,000 professionals if they'd want an AI office buddy. 99% said yes. That's basically everyone except the one guy who still faxes his expense report. 98%. Hey, I love Rizbot. 98% even said they want AI to recommend coworkers to be friends with based on shared interests. This sounds like the next friendship dating app waiting to happen. So yeah, we are apparently officially outsourcing our social lives to the algorithms even more. Sandy Torchia of KPMG called it the great AI paradox. AI can relieve loneliness, but also make people crave real human connection, which is another way of saying AI is the ultimate loneliness machine. 86% of people said AI made them realize that they need more human friends. Meanwhile, remote workers admitted to forming close personal relationships with colleagues that they never even met in real life. So apparently, Zoom plus Slack emojis now counts as intimacy in today's world. Half of the respondents said tech creates fake connections and replaces real conversations with surface-level interactions. But 94% of remote workers said AI actually increases their need for that human touch. So AI isn't replacing humans, it's reminding you how badly you miss them. Aww. Now, Gallup found that only 20% of US workers have a best friend at work, which is really sad. Glassdoor found that 53% avoid making friends at work on purpose because apparently work-life separation is code for I hate Karen from accounting. Reddit comments are split on the matter. Some say AI can't be your real friend because it's only sweet talks you. Others profoundly declare AI is my friend, never asks for money, and is always nearby when I need it. Which is true. Unlike your human friends, AI won't Venmo request you for nachos. One pro AI user said with an LLM, you can rant about niche hobbies for hours, ask dumb questions, and never feel judged. So basically, AI is the world's most patient bartender. The real takeaway here, though, is that if your office culture sucks, people will happily make friends with the chatbot instead. And if you're not worried about that, don't be surprised when your employees show up to the holiday party with their +1 named GPT-4. All right, we're taking a quick break here, but when we're back, we got more blockchain report coming at you. Oh no, we got socially awkward, right? Let's run the stinger. Thursday. Let's do it, guys. All right, we talked about the robots. Now it's time to talk about the algorithms and how they're affecting your and my social life. Well, most recently, the White House has finally answered the $1 million question about TikTok's US takeover. And that question was, who gets to control all the powerful algorithm that decides whether you're watching a cat fall off a counter or a teenager diagnosing you with ADHD? The answer, apparently, is Oracle. Yeah, the same company that's better known for selling clunky enterprise software to your dad's office is now in charge of the cultural engine of Gen Z. Under the deal, TikTok's U.S. operations will be handed to a new joint venture with majority of American investors and a majority American board. ByteDance, the Chinese parent company, will hang on to less than 20%. And Oracle, along with private equity firm Silver Lake, will be among the investors. Now, Donald Trump has even floated names like Michael Dell and the Murdochs being involved, although Fox Corp clarified that the Murdochs themselves aren't throwing their pocket change, just the company. The deal still needs some rubber stamps from regulators in China, but U.S. officials are already doing victory laps, saying it's basically a done deal. Press Secretary Caroline Leavitt literally said, we are 100% confident that a deal is done, which is exactly the kind of thing people say right before the Wi-Fi goes out and everything collapses and gets on fire. Trump is expected to sign an executive order this week declaring the deal a qualified divestiture under the last year's ban or sale law. And because paperwork takes forever, he'll also extend the pause on enforcing the law for another 120 days so the lawyers can bill everyone appropriately. Now, the stakes here are big because the algorithm is TikTok's crown jewel, right? It's why you're glued to the screen at 3 a.m., and it's also why U.S. officials have been screaming national security risk for years now. The fear was that ByteDance could be forced by Beijing to tweak the algorithm and start feeding Americans a steady diet of propaganda, conspiracy theories, or worse, nonstop Ed Sheeran videos. So the law makes it crystal clear. No cooperation on the algorithm between ByteDance and the new U.S. ownership group. Instead, the new American-led company will get a copy of the code, retrain it on U.S. data, and Oracle will be the hall monitor, constantly checking what's being pushed into the American eyeballs. But this only applies to U.S. users, which means Americans might eventually need a separate TikTok app entirely. So, congratulations, your phone will soon be blessed with yet another app icon that you did not ask for. This also expands Oracle's TikTok side hustle since they're already storing TikTok's US data domestically. And it doesn't hurt that Oracle chairman Larry Ellison is famously tight with President Donald Trump. In fact, Oracle CEO Safra Catz just stepped down to become vice chair of the board, replaced by two co-CEOs, which may or may not be connected to this TikTok chaos. But hey, it does free her up if someone wants to slide her into a leadership role at the new TikTok US venture. And here's the cherry on top of all of this. The White House hasn't even decided if it's charging a fee for brokering this deal, which is expected to be worth in the billions. So no golden share for Uncle Sam, just a lot of influence over the app that runs America's attention span. The bottom line here, well, the TikTok's US algorithm is moving to Oracle, the Chinese stake is shrinking, and the White House gets to say it tamed the algorithmic dragon. So whether this actually fixes the so-called national security risk is still up for debate. But hey, at least your For You page will now be made in America. All right, it's time for more of this morning's Bull Run Gang, and we got some good news and bad news. The bad news is that, unfortunately, our friend Big Dog, being the big dog that he is, he got taken to the pound this morning, so he won't be joining us, which is unfortunate. But the good news is we got a lot of more great stories coming your way, so let's get into it. Next up, we got the White House has told federal agencies to prepare for mass firings if Congress doesn't get its act together and avoid a shutdown next week. A memo from the Office of Budget and Management says agencies need to start drafting reduction in force plans. And if that sounds like a polite way of saying fire a bunch of people, that's because it is. The plans specifically target programs whose funding would vanish if Congress fails to pass a budget by the September 30th deadline. And not just any programs that don't line up with President Donald Trump's priorities. So if you thought politics couldn't get any more literal, here we are. Your job depends on whether it vibes with the president.
You are fake news.
The memo, hey, Donald, get out of here. The memo insists that they're hopeful this won't be necessary, but hope doesn't exactly pay the rent when your program's been permanently axed. The whole standoff started after Donald Trump refused to meet with the Democrats who want health care funding restored. This is after his One Big Beautiful Bill in July gutted Medicaid, the program millions of disabled and low-income Americans rely on. Republicans in the House passed a short-term measure to keep the government funded until November 20th. But Senate Democrats blocked that, instead of offering their own plan that restores health care funding. Trump responded by canceling a meeting with Democratic leaders Chuck Schumer and Hakeem Jeffries, calling their demands unserious and ridiculous. And in a social media post, he explained, "I have decided that no meeting with their congressional leaders could possibly be productive." After the memo leaked, Democrats accused the White House of intimidation.
You are fake
tactics.
news.
Hey, Schumer said that Donald Trump has been firing federal workers since day one, not to govern, but to scare. This is nothing new and has nothing to do with funding the government. And he's not exactly exaggerating either. Since taking office, Trump's cost-cutting initiative, literally called, as you might recall, the Department of Government Efficiency, or DOGE, because apparently no one in the room had a sense of irony, has already fired thousands of federal workers. Now, with the September 30th deadline approaching, every agency knows the rules. No budget, no funding, and if your work doesn't fit into the president's priorities, you're not just furloughed, you're fired. And California's Democratic primary was already crowded, and now Ian Calderon has jumped in, bringing a very loud pro-Bitcoin platform with him. Calderon, at age 39, launched his candidacy in a video on social media. His pitch: California needs a new generation of leadership to solve the affordability crisis. Which, if you've ever seen California rent prices, is basically like saying, we need magic beans. Calderon is no political rookie. He was first elected to the Assembly in 2012, served District 57 in Los Angeles County, and later became Assembly Majority Leader from 2016 to 2020. He opted not to seek re-election in 2020, citing family time. Instead, he launched lobbying firm Majority Advisors, where he's been CEO. And yes, this is a dynasty situation. His father, Charles, served in both Assembly and Senate. His uncles Ron and Tom also held seats. And his stepmother, Lisa Calderon, now represents the same district that he once did. So basically, Thanksgiving at the Calderon house is a quorum. But unlike the rest of the family, Ian is openly waving the Bitcoin flag. His campaign video and his posts say California should be the undisputed leader on Bitcoin. California has always been a leader on technology, he said, and now it's time to reclaim that role with Bitcoin. During his assembly tenure, he even explored Bitcoin integration at the state level, though the Constitution blocks states from recognizing legal tender. But now, with California hosting giants like Coinbase, and his message might resonate. Now, especially with Silicon Valley's crypto-friendly wallets waiting to donate. His entry further complicates the field to replace Gavin Newsom, whose term limited in 2026. Other Democrats already in, Katie Porter, Xavier Becerra, Antonio Villaraigosa, Tony Atkins, and even Diamond Resorts founder Stephen Klubeck. So, yeah, this ballot is about to look like a weird Hollywood cast list. For Bitcoin, this is another signal that crypto is seeping into mainstream politics. California has already passed the Digital Financial Assets Law, which took effect in July of this year. And that law required crypto firms to get a license from the Department of Financial Protection and Innovation. License holders must keep detailed records for 5 years, monthly ledgers of assets and liabilities, and face audits and enforcement if they, screw up. Think New York's BitLicense, but with better weather. The Assembly also approved AB 1180, a pilot program letting people pay state fees with digital assets through 2031. So Bitcoin is not only entering campaign speeches, it's literally shaping the state's financial laws. And if Calderon can convert hype into votes, Bitcoin gets a political seat at California's table. If not, the next governor will still be staring down this tidal wave of adoption. So good luck with that. And Giuzzi Holdings has decided to turn its treasury into a crypto smorgasbord by announcing plans to invest up to $1 billion into Bitcoin, Ethereum, and Binance Coin. Because nothing says we're confident about the future like dropping $1 billion into a digital wallet and hoping that the Wi-Fi doesn't go out. The move comes after the company hired a new chief operating officer, Dr. Doug Berger, who apparently walked into the boardroom, looked at the cash reserves and said, yeah, let's buy Bitcoin, Ethereum, and what the hell, BNB too. Now, Berger stressed that this isn't short-term speculation. No, this is not about long-term growth, he said, which sounds noble, but it's also the exact thing everyone says right before they YOLO into the market and pray for number go up. And to make it official, they even set up a dedicated risk committee under CFO Huazhe Gao. Now, because if you're going to gamble $1 billion, you want a committee of people in suits to nod seriously about it while secretly Googling what is Binance Coin. And Giuzzi isn't even going to custody their own crypto. Now, they're outsourcing it to a third-party custodian with top-tier standards, which is corporate speak for if it disappears, we'll have someone else to blame. Bitcoin, it makes sense here, right? It's the reserve asset, the global hedge, the digital gold that actually matters. Ethereum, fine. It runs the DeFi casino, it's got adoption, and at least you can point to use cases for it. But BNB, that's the kind of thing you toss into the portfolio when you're either very brave or you accidentally clicked add to cart on the Binance website. Still, the fact remains, $1 billion is moving into Bitcoin. That's supply getting tighter. That's bullish pressure on price. And that's another corporation admitting that the dollar just isn't cutting it anymore. So thank you, Giuzzi Holdings, for diversifying your reserves and proving that yet again, the smartest hedge in the world is the orange coin, even if you insisted on bringing Binance Coin to the party. And friend of the program, Anthony Scaramucci, Skybridge Capital founder, former Trump White House press secretary, kind of, and Bitcoin hype man for life, says that Bitcoin's going to 150K, baby. Despite Bitcoin dropping from its August high of 124, Scaramucci remains unfazed. He told CNBC that September lows are normal. 15 years of data proves it, he says. So for him, the dip is very consistent with Bitcoin's seasonal cycle. In fact, he says November into December is the sweet spot for buying. So forget Santa Claus rally. Scaramucci is calling a Santa Satoshi rally. He insists there's a tremendous demand for Bitcoin and a 3 to 4% pullback is nothing more than noise. Meanwhile, he's moon calling it yet again, 150K by year's end. Not in a decade, but by Christmas. Other guests suggested that Bitcoin might slide under 100K or even 75. Scaramucci said, good luck shaking his faith. He admits volatility is very real, but ETF flows and treasury adoption paint the opposite picture. We're talking big demand. He claims Bitcoin's cycle is extending beyond old 4-year patterns. Scaramucci also slipped in his new gig as lead advisor to AVAX One. He's helping a company accumulate Avalanche, the blockchain already name-checked by BlackRock and Visa. And he also praised Solana and Ethereum as part of the future of tokenization. Because if there's one thing the mooch knows, it's spreading bets while doubling down on Bitcoin. All right, we're taking a break. We're going to go right into it. We're taking a break, but when we're back, we got some tales from Hodlwood, so we'll talk about the intersection of Hollyweird and beloved Bitcoin right after this. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for a little Tales from Hodlwood, so let's see what's going on over there. Because right now, Jimmy Kimmel has been in the news as he's back on air for 2 nights now, and he's already gone all in on roasting President Donald Trump. In his Wednesday night monologue, Kimmel called Trump an 80s movie-style bully, and then he did a full sentence-by-sentence roast of Trump's social media post from Tuesday. That's the one where Trump claimed Kimmel was yet another arm of the Democratic Party and threatened ABC by saying the network's content amounted to a major illegal campaign contribution. Kimmel's response? Only Donald Trump would try to prove he wasn't threatening ABC by threatening ABC. The late-night host defended his constant jokes about Trump, saying he doesn't like bullies. And as he put it, I played the clarinet in high school. So yeah, this is seemingly a little personal. It's also worth noting that this was only his second show back after nearly a week-long suspension. Disney's ABC had yanked him off the air after his comments about activist Charlie Kirk's suspected killer sparked outrage. Kimmel had said the MAGA gang was desperately trying to spin the suspect as anything but one of their own, and that Trump loyalists were doing everything they can to score political points from the assassination. Right-wing websites and TV shows lit up everywhere with anger. FCC Chairman Brendan Carr, who is Trump-aligned, even called Kimmel's remarks the sickest conduct possible and suggested pulling ABC affiliate licenses. He later walked that back, framing it as a fight between station owners and the network. But ABC initially said the suspension was indefinite. In practice, indefinite meant less than a week. Kimmel returned Tuesday with a fiery monologue defending free speech, mocking Trump and pointing out that the real issue is whether America allows shows like his to exist in the first place. He also clarified it wasn't his intention to make light of a murder. And viewers, they responded. Tuesday's comeback episode broke ratings records, pulling in tens of millions of views across ABC, YouTube, and social media. Kimmel bragged about it the next night, saying, "A lot of people watched our show last night," though he added that it wasn't all of the country, since Sinclair and Nexstar, who control 64 ABC affiliates in nearly 30 states, are still refusing to air him. Cities like Seattle, Portland, Washington, D.C., Nashville, New Orleans, St. Louis, and Salt Lake City all remain off the Kimmel grid. Even so, the big audience made it clear his suspension only amplified his platform. But not everyone was impressed. Vice President J.D. Vance said he thought Kimmel was kind-hearted in parts of his return monologue, but still didn't apologize enough to Charlie Kirk or his family. So on one side, you got Kimmel leaning into bigger ratings by calling Trump an 80s bully, and on the other side, you've got Trump and his allies trying to cancel him by making him even more popular. Okay. All right, it's time to wrap today's show up with a little bullish, bearish, or BS. Let's run the stinger and see how things are looking for Bitcoin. Okay. All right, gang, it's that part of today's program where we recap our top stories of the day and tell you how things are looking for Bitcoin moving forward. To recap, we got Michael Saylor. He claims that Bitcoin isn't just digital gold, it's going to eclipse gold tenfold as corporations and central banks wake up to BTC's liquidity, portability, and scarcity. Of course, if it's Michael Saylor related, you know I'm calling bullish on this, right? I mean, Saylor's megaphone, it matters. Every time he makes headlines, more institutions consider Bitcoin as a treasury asset. That narrative fuels long-term price appreciation and keeps upward pressure on demand. So basically, Saylor screaming equals bullish for your bags. So that's how I'm feeling. Next up, we got the administration is telling federal agencies that agencies to prep reduction in force plans if Congress fails to avoid a shutdown, putting thousands of jobs at risk. I mean, how can you be anything but bearish on this one, right? I mean, government instability and layoffs, short-term uncertainty, and risk-off sentiment. If fear spreads through markets, Bitcoin gets caught in the downdraft along with equities, even if the long-term hedge narrative survives. So budget chaos equals near-term bearish pressure, so I'm not feeling too great about that one. One bullish, one bearish, one to go. Let's see if we can right the ship here. Ian Calderon jumped into the California Democratic primary on a pro-Bitcoin platform, promising to make the state a global leader in crypto adoption. Very bullish on this one, gang. I mean, crypto entering mainstream politics, especially in a state as big as California, fourth largest economy in the world, by the way, this signals growing legitimacy. And over time, that normalizes Bitcoin for voters, donors, and regulators, creating tailwinds for adoption and price growth. Or in other words, Bitcoin on the ballot equals bullish for you and me, baby. So that's what I'm feeling there. So let's recap today's scorecard, shall we? We got 2 bullish, 1 bearish, 0 BS, which means today's overall diagnosis is bullish. Thank the good Lord. I think that's the first one this week. Bitcoin's narrative is dominating headlines. We have Saylor fanning the flames of institutional FOMO and Bitcoin seeping into U.S. politics at the state level. So yeah, the government shutdown drama could rattle markets in the short term, but those are temporary jitters compared to the long-term adoption arc that we're seeing right before our eyes. The net effect here, the Bitcoin story is gaining momentum, and the price action will reflect that bullish trajectory over time. So while I know it's hard, we all just need to take a breath right now, remain patient, and Scaramucci's right. We're going to see 150K Bitcoin in no time. That's right, Flavor. I like it. Well, gang, that is a wrap for Wednesday's show. Again, we had to end a little early today because big dogs were doing big dog things, and that's okay. We'll have them on another time, but we appreciate you and the fam at home sticking with us. As always, we are here Mondays, 10 a.m. to 12 p.m. Pacific time. The rest of the week, that's Tuesday through Thursday, we're here 8 a.m. to 10 a.m. right here on RoxomTV to give you your daily crypto and Bitcoin fix. As always, thank you for tuning into the Blockchain Report. If you haven't already, do me a solid, okay? Like, follow, and subscribe to RoxomTV, and me if you want to as well, at Hank at RoxomTV on all platforms that matter. And I will see you boys and girls tomorrow. Until then, stay safe, stay informed, and always remember to hodl on. See you then.